What's up, everybody? You got Max here, and today we're going to be doing a comprehensive tutorial video on how to use our new custom indicator called the current. Before we get into the video, if you could please like and subscribe. We're a young channel and your support means the world to us. With that said, let's get into it. So this is how the current is going to look right out of the gate. You will notice that we have red up top, yellow in the middle, green down below. Now, there's nothing profound about this. It's really more of just sort of colors to help guide you. So let's take a look here. So basically, think of the red as stop. Think of the green as go. Think of the yellow as sort of whatever you want in between those. Sort of hesitate, maybe pause. Nothing clear yet. Just sort of like a traffic light, okay? Now, this number down here is called Pearson's coefficient. Now, for the purposes of trading, just think about this as the strength of the downtrend. If you want a more intricate explanation of what Pearson's coefficient is, give it a Google. But for the purposes of what we're using it for, it's basically the strength of our downtrend, okay? So we have stop, we have pause, and we have go. And you will also notice that this top bracket right here is slightly more aggressive red than, and it's the same for the bottom too. So more aggressive red, a little bit shallower, not as in your face. Same with the green. Okay, so most extreme, a little shallower, shallows out. Okay. Now you might be wondering, what are these little numbers over here? These letters and numbers. What is the CP4, CP3, CP2, CP1, M, CN1, CN2, CN3, CN4? Now, these are basically line identifiers, and the purpose of these line identifiers is so we've come up with a trading system, and it's not that complicated. It really is quite easy. It's going to be a simpler way when everybody gets used to it for us to all sort of collaborate thoughts on it and have everybody easily be able to identify and immediately know what line we are trying to reference. So as I mentioned, this is called the trading current, and the inspiration for that name comes from like a current, like a river, like a creek. So we have current positive 4. So I'll take one step back. This is our mean line, okay? So current positive 4. And then we have current positive 3, current positive 2, current positive 1, our mean line, current negative 1, current negative 2, current negative 3, and current negative 4. So if I'm referencing price action, I say, yep, we're in a 76% downtrend on the, right now we're on the 5-minute chart. We're in a 76% downtrend on the 5-minute chart, and price just crossed over CP2. You'd know exactly what I'm talking about. You say, oh, it's this line, it's the CP2 line. So it really just plays into, we need labels so that hopefully, you know, we get a Discord going with a bunch of people and everybody's using it and finding it as another point of confluence with trades that they're taking. And it's a very easy way, rather than saying like, yeah, we're a standard deviation, like plus or minus, you just say CP2. It just shortens it up. It's our own trading strategy. It's, you know, it's novel to us, right? It's something that we created, and you know, we think it's catchy and it will work. It's pretty easy to understand. So if you haven't already picked up on it, this is our mean line. This is 1 standard deviation away from the mean. This is 1 standard deviation away from mean. This is 2 standard deviations away from the mean, and this is 2 standard deviations away from the mean, and so on. It goes on forever. Okay. Now let's get into the mathematics of it real quick before we dive into a few examples on how to use it. 68% of all data, and the way we're using standard deviations and this bell curve as it applies to trading, candles and price action is just data. So 68% of all data, of all price action, will occur within 1 standard deviation of our mean. So almost 70%, 68% between here, basically in the yellow, okay? So in between the yellow, we have 68% of all price action will occur there. Now, we take it out one more. Between CP2 and CN2, we have 95% of all price action, of all data, will occur between two standard deviations of our mean. So between these two lines, 95% of all data occurs between these two lines. Now, for me, the way I use the current, we'll get into more strategies as this video keeps progressing. I like to call anything that has less than a 5% chance of occurring, which is anything outside of CP2 and CN2, a statistical outlier, which means we are likely to get some sort of mean reversion from here. Now, something to note, and we're getting into a little bit of strategy here, which is more is coming later, but if we're in a 75% downtrend and we were to hit CN2, right, or just outside of it, and we recognize 95% of all data occurs above CN2 or below CP2, we are still in a 75% downtrend, which is pretty strong. The strongest it's going to go is 100. We don't necessarily want to just long because we have a statistical outlier when we're in a strong downtrend. Now, you can decide for yourself what a strong downtrend is. Some people might call it 30 or 40 or 50. For me, I call it basically anything over 70. I'm not trying to, I don't want to fight the trend. I don't want to swim upstream. Hence, I don't want to fight the current. I want to trade with the trend. The trend is your friend. So for me, looking at a downtrend like this, I would be more interested in shorting something. I mean, this is a prime example on the 5-minute. I didn't mean to pull it up here, but we recognize that 95% of all data occurs between this line and this line. And when we get a crazy move like this is a statistical outlier. We typically get a major bounce the other way. This is on the 5-minute, right? So now look where we're rejecting. We rejected here once. We can go above this for sure. You know, this happens all the time. But the point of this is, you know, 95% of all data is going to occur underneath this line. And you can usually expect some sort of mean reversion from this. And we recognize we're in a 75% downtrend. So it wouldn't be far-fetched to take some sort of mean reversion play from here, recognizing we did just sort of have like a little boomerang, but it wouldn't be bad if you just wanted to enter here. I mean, again, you'd have to use it as a point of confluence with some other, you know, trading styles that you have, but recognizing on the 5-minute chart, we are in a strong downtrend and we are at CP2. And you could probably at a minimum target some mean reversion or, you know, maybe CN1 and head back to like the lower part of sort of like our yellow bracket, okay? Now, this works on all time frames and it auto adjusts. So it does all the work for you. Now, let's give a couple examples. If you're a scalper, you trade the 2-minute, see what the 2-minute looks like. And it's a very big program, so it might take a little longer than some of your other indicators to load, and we'll get into all the functionality. But you're a scalper here, right? Let's say you enter up here, right? Here's a prime example. You enter up here, you throw a stop above this wick, and you're targeting maybe like, I don't know, you could target here, you could target CN2 given the strength of the downtrend, you could target here, but look at where we bounce. Look at where price stops going down. We hit CN3. You recognize that 99.7% of all price action is going to occur within 3 standard deviations of the mean. We hit CN3. This was a major statistical outlier. Major. So on a low time frame, on a quick move, if you're a scalper on the 2-minute, just we're talking about this example, you're going to want to cover probably at CN2 and CN3 because you recognize that mean reversion is necessary. It's likely and it's necessary. Okay, you don't want, and you're not going to get it. You're not going to get some sort of price action that just completely disrespects this channel because it's just math. The channel will shift, right? So like if right now we're hanging out well above CP1. Okay, so the longer we hang out above our mean line, Pearson's coefficient, the strength of our downtrend is going to shallow out. If we just sit up here and we just range up here for like another, you know, half hour or something, you're going to see this start to shallow out. And as new data comes about, the current is automatically shifting and adjusting with new data. Every 2 minutes, we have a new piece of data. This is a 2-minute chart, new candle every 2 minutes. So this is going to start to shallow out as we hang out above the mean, and then maybe you could actually, look to enter some sort of long. But given the strength of the downtrend being 74% almost, and we're at CP2, above CP2, it's not smart. It's not necessarily smart to be looking to pile into longs up here. Okay, given the strength of the downtrend and how we're already overextended. So, like I said, it works on all different time frames. So let's look at it on like a 4-hour. Let's see how it looks on a 4-hour. So here's how it looks on a 4-hour. Now, it automatically adjusts, and you can see how price has an interesting relationship with all of these lines. Now, look where we're bouncing right here. We're bouncing right off of CN1. We haven't really even broke down yet. We're still just hanging out on like the lower part of where price usually always hangs out, where 68% of all price action occurs, which is a strong majority within 1 standard deviation of the mean. We had a nice little move down here, and we were shorting up here, but you can see we haven't really broken down yet. Now, something you'll notice with the current is it likes symmetry. It kind of works like a range, okay? So you'll notice here price bottomed out at CN2, CP1. Now we hit CP2. Now on this move here, I wouldn't be surprised to see some sort of symmetrical move down to like CN2 just because we bottomed here once before, okay? I don't have data to back that up, but something you will notice is it's oftentimes symmetrical, okay? Now, let's get into some higher time frames and let's go over how this works. And then I've got a few more examples on, now let's say you wanted to take a standard deviation of, you wanted to use the current and take standard deviation models against 1 year, okay? Think of this, think of the intervals as sort of like comparable to moving averages, okay? So, and by the way, we got a lot of settings here. We're going to get into all of them, okay? But we're going to start with this down here. So basically, I would set my interval to 365 right here, and I can just remove these for now. We'll get into that in a second. But now it's taking a measurement, and I got to throw this on for a second. Okay, so here is the current overlaid with exactly 1 year's data. So 365 days of daily candles. And you can see we are right now fighting to try to get back to our mean, okay? So something to note, interesting enough, we did have our macro top reject off of CP2. You can see all the interaction here with like CN1 and the mean. I wouldn't be surprised to see some sort of like, global bottom right here again at CN2 for a lot of other reasons besides the current, but just the fact that we did sort of like double top here at CP2. Again, we mentioned that these things are often very symmetrical. So let's get into all the settings. There's a ton of settings on here, and I want to show you how to use them because that's what really makes this thing different and great, okay? So before that, let's switch back to a different time frame. Let's look at the 4-hour. Now, we can shorten this up a little bit. So this is basically how many candles we're going to use. Now, there's 3 different types of channels on here, okay? There's the colorful one, which is down here, so standard deviation channel 3. And then there's plot 1 and plot 2. All right, so let's throw this on. I'll just show you, let's remove plot 3 to start, and I'll show you these upper ones. So let's let this load for a second. So let's say I want to analyze a macro downtrend and then a micro uptrend within it. Pretty similarly to moving averages, I'm going to throw on the 200, the 4-hour 200 candle moving average, and then I'm going to throw on the 100. I'm going to see how they look on here. So right now you can see on the 200, we are in an uptrend, and we are somewhere right around our mean on the 4-hour, okay? On the 4-hour for the 200 candle moving average. And then we shorten it up, and we recognize that we're in a much stronger uptrend, but we have hit just underneath right here. We basically dropped under, we hit CN2, okay? So on the 200 candle on the 4-hour, we're at our mean, and on the 100 candle on the 4-hour, we are well underneath our mean. We are actually at CN1, which is going to be one line, or I'm sorry, CN2. Now let's find another example where we're in a downtrend and an uptrend. Let's put on a 300 candle moving average. So this is interesting. You can see, I'm gonna make it a little bit more severe just to contrast it a little bit for you guys. So let's move it back a little bit more. We'll be in a downtrend here. If I wanted to manually analyze and I input this, you can see that for a 350 candle measurement on the 4-hour, we are in a downtrend, but only measuring 100 candles, we're in an uptrend. So you can contrast these and juxtapose these pretty nicely, and you can see pretty clearly that although we are in a micro uptrend, we are still in a macro downtrend, measuring more data. The further back you go, the more meaningful it's going to be. Now, if we were to throw on this one, plot number 3, this is basically just colors, okay? It's gonna clean it up. We made these green and red, but we can't have too many colors, otherwise it looks completely cluttered. But let me make this the same here. So let me match these up just so they're lined up. If I wanted to measure from right here, basically from like the end of May all the way until where we are right now, but I also wanted to see like where we're at because I'm making day trades maybe. I could say, yeah, you know, we're still in a 44% downtrend right here, but look, you know, there's definitely plays to be made on the lower time frame. I could see based on our lower time frame trend, you know, I could see us pushing back up here. So it looks like we recognize that 95% of all data is going to occur underneath this line and this line. And we recognize that in a strong uptrend like this one, measuring 100 candles on a lower time frame, our little uptrend right now within the macro downtrend, you know, we are at CN2. We are basically at CN2. We just bounced off of it. So could I see something like this, a bounce back up to CP2 again? Sure. There's definitely plays to be made. So it's interesting how you can juxtapose these against each other and have multiple standard deviation channels on one time frame. And I believe that we are the first indicator like this to do that. Now, let's keep going into different examples. I know a lot of people trade lower time frames, so let's look at like a 5-minute. Okay. Now we can remove this for now. Now, basically, what these settings are here, and I guess I'll get into it for a second here, just while I have it up. If I wanted to basically just increase like the top and play, like instead of 1, 2, 3, and 4 standard deviations, I would recommend leaving all these settings because it's just math, right? Like you're not gonna discover something about this that the geniuses before all of our times already did, right? We're just applying mathematics to trading because trading is just math at the end of the day. You're not really ever going to see like 5 standard deviations. 4 standard deviations away from the mean is already a crazy statistical outlier. You don't really need more than that. But if you wanted to, you know, you could throw on 5 standard deviations like this. And on a really low time frame, you might see like a crazy wick because you get some cascades and stuff. But you could and see how it's going to move that line like way out like that. So you can, you know, you can surely add on whatever you want. You can customize it however you want, and that's why we put this here. You can also remove them by unchecking the boxes. So This applies to plot number 1, so the first standard deviation channel settings, and then plot number 2s are down here. You can play with them, get to know them, get familiar with them. But sometimes I keep off plot 2. It's a lot to look at. So for me, I really just put on this one. I think it's the cleanest looking. I think it, for my purposes, I'm not like a day trader. Sometimes I do buy and sell in the same day, but I typically hold trades a little bit longer than that. So this is really all that I need. But anyways, you're free to monkey around with all these settings as much or as little as you want. Change the colors. I think it'd be useful for everybody to keep their colors pretty much the same. If you do have a dark color background, to note, these last two, you could change these to white. So this would change the lines to a white instead of a black. So you can see how these change to white. So if you have a dark background, you'll probably want to do that. I'll change mine back. So again, these are going to be your default settings. You can mess with, like, if you want to show labels, if you want to extend it to the left, that's fine. Let's get into alerts, because that's the really, really interesting part. So let's just say on the 5-minute chart, I want a notification if price crosses CP2. Let's just say I'm trading the 5-minute and I'm like, I've been looking for shorts all day. Price has just been hanging out below the mean. I don't love shorting when we're already like below our mean. I really want to wait for, some sort of spike up, I guess, kind of like we're having, more or less. Now, what I would be doing here is I'd be saying, we recognize that 95% of all data is going to occur between these two lines. We've been selling off all day. If price gets back above CP2, I'd look to probably take my short up here and target some lower prices. That's where I'm looking to play. So I don't want to be glued to my screen all day. Now here's what I can do. Here's what I can do. If I want a notification pinged to my email, my phone, a normal trading view indicator when price crosses CP2, all I will do is you just click on the indicator with 2 fingers, like you'd normally set an alert, and you go add alert, come up here, and you're going to scroll right down, and you're going to find CP2. If price crosses over CP2 on the 5-minute, I want an alert. It's that simple. Now let's check out what it looks like right here. On the 5-minute on Ethereum, I want alert if price crosses CP2. Now let's say I trade even lower time frames, right? I have that alert set. Let's put up the 2-minute. Looks like we already crossed that CP2. Looks like if you had shorted CP2, it would have been a nice little play. Now let's say, by the way, price is more likely to become extremely overextended on lower time frames. Like, look, we got this wick cascade down here, which is a major statistical outlier. And of course, we had a crazy bounce after something like that, okay? So let's say on the 2-minute, I want a notification if price crosses over CP3. And we know that 99.7% of all data is going to occur within 3 standard deviations of our mean. So between CP3, CN3, almost all data, 3 basis points will occur outside of it. All I do, again, 2 fingers, just like I'm adding a normal alert, add alert, I scroll down, and I want alert if price crosses over CP3. Just like that. And now I have 2 alerts set. I'm trading the 2-minute and I'm trading the 5-minute. So I will be alerted if the setup that I'm looking to take, and basically I'll be alerted and I can manually place it, or if you know how to program, you could work this into there so that it actually places the trade for you, which is pretty interesting. I haven't done that yet, but I've had some discussions with people that think they know how to do it. So anyways, now we have multiple alerts set, and this works again on all time frames here. So we'll look at the 30-second. Now I'm gonna see if we can catch one live here. Okay, so I would like an alert if price crosses under CP1 on the 30-second. double tap, add alert. I'm on the 30-second. If price crosses under, so I find CP1, crosses under CP1. So now if price crosses this line, I'll get a notification. I'll also set one at CP2 crossing over CP2, just so if it crosses under here and over here, I get a notification, just because I'd like to show you how it pings. And it does ping my phone and email, and also will pop up on the screen. So if it crosses over CP2, so cross over CP2, add alert. Now you can see here, I've got my 4 alerts going right now, all the ones on multiple different time frames. It's scanning the market for me in real time. I can go out and about, I can live my life. If it pings my phone, then I hop on, I take my setup, okay? Now, we'll check back on this in a second, okay? We got multiple alerts set. We'll see if we cross these lines. I want to touch on one more thing with alerts because this is the coolest functionality of it, okay? Now these alerts that I just said are completely independent of Pearson's coefficient. It has nothing to do with this percentage, the strength of the downtrend, okay? It's just simply on a given time frame, if price crosses over whatever line I choose, I want an alert. Now, if you go back here to our settings, you'll notice we have these custom alerts, these multi-time frame alerts down here. This is the coolest part for me. I want to go back to the 1 minute and I'll set one of the alerts. We'll see if we can catch one live. I would like to set an alert on the 1 minute. So let's just say I trade the 1 minute a lot. And I have a very high hit rate that when we're in a certain strength of a downtrend or uptrend, right now we're at almost 60%. I love shorting when on the current, we are over 50% in a downtrend and price gets above, let's just say CP2. I just made this up, okay? What I would do is I'd go to my settings, I'd scroll down, I'd pick my time frame that I want. So I just set on the 1 minute. And by the way, this is this line 2. So line 1 would be CP1 or CN1. Line 2 would be CP2 or CN2. So on the 1 minute, if Pearson's coefficient is greater than 50, either up or down, and we cross line 2, I want to get an alert. But only if Pearson's coefficient, if the strength of the downtrend is over 50. If it's at 30 or 40, I don't care. Not strong enough for me, okay? So I click OK, I got this set. And now I go back to where I set my alert before. I pull this up and I go multi-time frame crossover because I want to short. Well, I mean, you could set both, right? So crossover CP2. So line 2, I'm sorry. Number 1. So on our setting right here, I'm just going to go back here. So on our number 1 time frame, on the 1 minute chart, if we cross line 2 and Pearson's coefficient is greater than 50, I want an alert. So on number 1, I can get a crossover or cross under alert. Now the difference is if I go cross under, it's going to alert me if we get cross under CN2. You don't cross under CP2 as you're moving up. That doesn't make sense. But for the sake of what I'm doing, let's say I just like to short. If we get a crossover, I want an alert. Now, this is different than all these other alerts that I just set. See, multi-time frame linear regression crossover considering Pearson's. It's going to alert me if Pearson's coefficient, again, I did this one, multi-time frame. It's going to alert me only if we cross line number 2, we cross over CP2, and Pearson's coefficient is greater than 50. We don't want a notification if it's flat, like where all these other ones, it's fine if I'm watching it, right? But I might be getting pings and this thing might shallow out, and you want to short into a strong downtrend and you want to long into a strong uptrend. And what's cool about these multi-time frame alerts is that it considers that. It will only alert you if it meets all of your criteria. Now we can set a second one. Let's say I trade the 5 minute. mean, this works on the weekly chart, okay? It works on all time frames. You can set multiple alerts on numerous different time frames. Now, right here, we're in an 81, almost 82% downtrend. Now let's say I really want to short, if this downtrend remains above 75%, I really would like to short CP2. I would love to short CP2, but only if the strength of our downtrend is still above 75%. So I'd go here. I would go to the 5-minute chart. That's the one that I'm looking at. And I want, if we cross over a line 2 and Pearson's coefficient, the strength of our downtrend is still 75%. I click OK. Then I go back here. I go to my alerts. Now we're in the number 2 column. We already set alert number 1 on the 1-minute chart. Now I want an alert if we cross over line number 2. By the way, it's number 2 is not line number 2. It's the second setting that we had. Okay. If we cross over CP2 and Pearson's coefficient remains over 75%, I will get an alert. So again, just a reminder what that one was. On the 5-minute chart, if we cross over CP2 and Pearson's coefficient remains over 75%, so still in a strong downtrend, I want a notification. And then I pick up my phone or my computer, then I look to start entering some shorts. So no alerts have been triggered yet, but we'll see if we get one. If not, I can record them and post them later. But you can see how effective this would be because we have a theoretical upper limitation to what we're capable of. We also have a theoretical bottom to what we're possible of accomplishing here. Price doesn't, I mean, it very, very rarely ever gets outside CP4 or CN4. And if it does, it's just a wick. It's just a capitulation event, which we've all seen. No, nothing more, nothing less, okay? This works on all time frames. Here's a 15-minute. Pretty interesting interaction here. You can see how much we respect this line, all these lines. When we get above CP2 or below CN2, it's statistical outlier data. It's not sustainable. It's absolutely not sustainable. So if you're looking to trade and you see something like this, you go, oh, this looks like a major for one SFP, right? Look at this. It's for those that trade candlesticks, this is a pretty recognizable pattern right here. Swing failure pattern right above CP2 on a 15-minute chart. It's like, this is a statistical outlier. It's just math, right? This hit CP3. This hit right here. Like almost all data occurs. 99.7% of all data is going to occur underneath CP3. We hit it perfectly. I mean, you could even utilize a strategy on this. Basically just setting a ton of asks up here. So just always have short orders set up here and always have long orders set down here. And you could just constantly bracket this. So whenever we hit CN2 or CP2, it just takes you in and out all day long on multiple different time frames. It really is, it's so simple and it's so interesting to play with because it's just math. There are theoretical limits to mathematics. You're not going to redefine the rules here. And if we do get some sort of crazy, like, 3,000% move on a coin, you will see it adjust. And of course that will provide a major outlier because it's a 1 in 50,000, chance that something like that happens where like you get an altcoin or a micro cap that just goes parabolic in a day. And then you can use it as an opportunity to basically short, and you can actually add on to this too if you wanted. So I like to go down to the bottom one. So our channel number 3, which has the most clear settings, in my opinion, the green, the yellow, and the red. And if you had a crazy altcoin outlier that was just absurd, you could add more on here. Now, again, you'll never see price hitting this unless it's like some crazy, altcoin pump, whatever. But we do have, we do have the functionality to get all the way out there. So, and there is bell curve data that can actually measure out further than 3 or 4 standard deviations. But then you get into like you have 2, 3, 4, 5 decimal points, but it does happen, right? So if we see like we see a crazy pump, on some small cap, sure, we could hit, CP6, right? And then you could look up like, how many what's the percentage of data that falls 6 standard deviations outside the mean? You'll find something. But anyways, it's totally customizable. You can expand it. Um, I don't trade micro caps really, so there's no need for me to have anything crazy like this. I trade the large caps. I trade the blue chips, and you can see how well price respects this on multiple different time frames. Let's look at the 30-minute. See what we got going on here. Yeah, interesting again. Let's delete these. And you can see the symmetry here as well, right? Like look how many interactions we had, right? CP2, 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 CN2, CN2, just shy of CN2. And we had a wick to almost CN3. Look where we hit almost up here, almost CP3. The symmetry is uncanny. It's incredible. I mean, you could literally just, I mean, you can just do this. You can set shorts up here. You can join the ask up here. You can join the bid down here all day long and just play this. Just play the current. That's it. Extremely profitable strategy, one that I actually utilize. So I would urge everybody to play around with this, find strategies that work for you, find your edge within it, use the alerts. The alerts are the biggest game changer, right? So like if I've been trading the 30-minute and I recognize like this is a really strong pattern, I've had a lot of success basically just like, longing CN1 to CN2, covering up here. I'll set some alerts, right? I want an alert when price, and I don't care about Pearson's coefficient right now, let's say, hypothetically. All I do is I want a notification of price crossing over CP2, 2 fingers on it, just like you're setting a normal alert. Add an alert on the trading current. I want an alert of a crossover of CP2 on the 15-minute. We come here, or I'm sorry, this is the 30-minute. Price crosses over CP2, then I'll look to get short again. It's that simple. It is really that simple. So anyways, you can see how useful this is. You can see how it provides a lot of clarity. One, it can help you not swim upstream. I see a lot of people trying to long into a downtrend or short into an uptrend. Whichever time frame you trade, throw on the current. Throw on the current. And by the way, it's fine to use the default settings. I think it's going to come with 128. That's what we had. Use 128. That's fine. 128. But think of it as sort of like comparable to moving averages, right? You use a 100 candle interval. Use a 200. Use 250. Maybe however you use candles. Shorten it up if you want. Use a 50. Use a 20. Right? You're not going to get a ton of data, but nonetheless, it still works. Here's a 4-hour, 128. Let's throw on like a 50 now, right, for plot number 2. So now we're going to probably get some sort of, okay, so look, multi-time frame. Okay, here we go. We got 2 alerts. We're going to come back to this here. CP2 crossover. So let's click on both, right? So it'll bring us to it. Here we go. Woo, wow, we're moving. Wow, we're moving. We are moving. Okay, a lot of alerts going off. A lot of alerts. Let's see what's going on here. So we had, let's check this one on the 5 minute. All right. Wow, look at that. Look at it rejecting off of that. Okay. A lot of alerts going off. Look at that. See, look how we rejected right off of CP4 here. Look at that. Statistical outlier. I'm going to get rid of this quick here. Plot number 2. So we wanted a notification when price crossed over. Which one was this? CP2. Well, we got it. Price crossed over CP2. We got our alert. It's pinging my phone. It's going crazy. Right, here we go. Let's see what else we got. Wow, more alerts. Okay. Very good. Let's see. So we had the multi-time frame linear. This was the custom indicator that takes into account Pearson's coefficient. So this was number 2. So what did we have set for number 2? Number 2, we had if price crossed CP2 and we were still in a 75% downtrend on the 5-minute. So at the time where it did cross, we did cross over CP2 and we were still at the time, I assume, in a 75% downtrend, which is why it notified me. But it has since shallowed out because we got a new 5-minute. Here's one that we set here. So CP3 crossover on the 2-minute. We wanted a notification if we crossed over CP3 on the 2-minute. Look at right there. If that's the trade we like to take, we would have set orders there. We would have been notified immediately. We could have potentially made a trade. Not that we're here to trade, we're just doing a demo, right? But you can see the alert functionality and how it works. I got all these alerts. It went off. Almost all my alerts went off because I was another one here. Here we go. It's alerting me again. Here we go. More crossover. Wow, this is a pretty crazy move we're having here. Yeah, this might just be. Wow, look at this move. Let's see on like. Yeah, they're hunting some stop losses here. I mean, this you can see this. This is intentional here. To me, this again, this is not necessarily about the current, but you can see that they targeted all the stops here. Now they're targeting all the stops here. So this is very interesting price action, but you can see how it's interacting with the current. You can see how it's working here. So let's see. We had a nice fit earlier. I believe we had this on maybe. I'm gonna cancel my alerts now because they're gonna just they keep going off, right? So every time price crosses over CP2 or CP3, whatever alerts I had set. Let's see. Remove all. Let's remove all of our alerts. We don't need them right now. We see how it works. We had a pretty good fit on here earlier on the 30-minute. I think it was 250 or maybe 300, but let's see how this looks up here. So we'll see if we got some like mean reversion. Okay. So it looks like we were just shy of the mean there. But again, nothing too crazy yet. We had a statistical outlier of a move down here and price whipsawed and we got mean reversion, right? Just like what happened here. Statistical outlier, we recognize that 95% of all data occurs underneath this line right here. So we got a wick above it and we had mean reversion, right? So what happened to the downside now? We had a statistical outlier of a move here and we got some mean reversion. It's a very effective strategy. Coolest part is you can get notifications. You don't have to be staring at it all day long either, which is great. It's fantastic. So anyways, that's a quick intro to the current. Again, if you want to set alerts and just say like right here on the 15-minute, I did cancel and I'm gonna say, okay, I recognize like, this was a crazy sort of whipsaw right here. Now I'll look to get short. If we come back up to CP2 on the 30-minute, I'd like to get short, right? So let's come here, add an alert. If we cross over CP2, not cross under, cross over CP2, Cross under would be if we're already above CP2 and then I want a notification of us going down, then we'd cross under. But for where we're at right now, I want a notification if we cross over CP2. I create, now I'd get a notification. And I can look to take a trade, right? So we'll see what happens. You know, again, you can use this on any different time frame. You can have, as you saw right there, I'm happy to happen during the video. You can see how many different time frames we had alerting us all at once, and that was a pretty crazy move that we had there, especially on some lower time frames. But you can see how well price respects, even on a crazy move like this, how nicely price respects mathematics. It's that simple. We came down here, CN2 to CN3, we mean revert, we bounce up to CP2, CP3. It's really that simple. It's that simple. So anyways, that's a demo of the current. We're going to be giving away the current for free. Now, I'm going to post a tweet about it on the official becausebitcoin.com Twitter. All you got to do, you got to retweet us, you got to follow us, and then you got to comment down below your TradingView name so we can actually give you access to it. And if you have one, your Discord, because we have an awesome Discord we're making just for people that trade with the current so they can share their strategies. And think of yourself right now in the early stages of this as sort of like the beta testers. Okay. You get to take part in this. It's the first indicator like this with a trading strategy and all the customizations that we have with it. And it's totally free for all of you guys that are seeing this video. And all you got to do is basically help us get the word out. We want it to be a great success. We think it's going to help people make a lot of money. It's been absolutely critical in transforming my trading strategy. And it really provides a lot of clarity, specifically around don't swim upstream, don't fight the current. You want to swim downstream. It's going to make your life a lot easier. So, you know, let the river drag you downstream, let the current pull price down if we're in a downtrend or drag it up if we're in an uptrend. And the alert functionality is really, really unique. So, you know, this is my first time really like explaining the current. I've been trading with it for 3 months, so I hope it was clear enough. If not, you know, hit me up and, you know, join the Discord after you get access to it, and let's talk about it. And I'm here to help troubleshoot with the alerts. I know it's a lot, but we really tried to make this an all-in-one indicator, and there was no way of doing that without making it very comprehensive and long. So that's why we've got multiple different standard deviation channels built into one. And we've got multiple different time frame alerts, some that take into account the strength of the downtrend or uptrend and some that don't. You know, we've got different colors. It's a whole thing, and we've been working on it for a long time. It cost us a lot of money to get this thing built, and we are really proud of it, and we want to get the word out there. So if you made it to this point, I hope you enjoyed the video. I hope you will see some value after watching the video. And if you followed me on Twitter, you see me trading with it, and you'll be encouraged enough to give it a try. We'd love to hear your feedback. And if you haven't yet, please like and subscribe. We'll see you next time. Thanks.